Part 2 of Chapter 19, Section 1 talks about calculating and paying property tax. Now, property tax is different than income tax. It is the tax that is based on whatever real property you own. And real property is land or anything that's attached to the land. For instance, if you look at a farm place, real property includes any land, the house, any barns, any silos, any grain bins that are attached to the property. And sometimes it's also referred to as real estate. Anything that's not real property is classified as personal property. That would be the items within your house, your furniture, appliances, personal items. That's all considered personal property. You pay tax on real property, and you pay tax based on what the value is assessed at. Usually what happens is you have what's called a county assessor that comes around and will determine a value of your property, and that's what you pay taxes on. It has nothing to do with what you could sell the property for. It's just based solely on what you're going to pay taxes for. That's your assessed value, and it's based on the judgment of the assessor. So hopefully you have a good assessor that will accurately give you a value for your property, because it can come into play when you try to sell when you try to sell real property, what it's been assessed at and what you can list it at. Keep in mind, real world type situation, if this assessor comes out and they are assessing your property incorrectly, you can go to the county to try to get it corrected. It's a good idea, if you know the assessor is coming out to take a look at your property, at least maybe the first time, or if you've done some updates, that you are available to visit with them. So when you are calculating and paying property tax, the assessor will give a value of the property. So in this situation, the assessed value is $80,000, and you pay a certain tax rate on your property tax. And just like any type of interest rate, it is an annual percentage rate. So for the assessed value, if the tax rate is 1.3%, your annual property tax is $1,040. That's what you would have to pay annually. So what we do when we journalize it for a business, we have an account called property tax expense. We're going to write a check, so we credit cash, and we're going to debit that expense account. Now, in reality, if this were your personal home, many times that cost is worked into your mortgage and you pay a little bit each month, and your mortgage lender will pay the tax for you because they've been holding that money for you. Lots of banks will do that. If not, you need to be responsible and set that money aside so that when your taxes come due, you pay for it. Now, that is Section 1. So at this point, you need to go out to Applia. You're going to do the 19-1 work together and on your own. Notice you have the transactions to buy plant assets and to pay property taxes. And if you look, the work together on your own is due tonight at 11, and it is graded, so I know who has done it. You need to work on this now. So shut the video off and go ahead and